Good morning, everybody. Welcome back for another edition of London Session with SPDas. We are ready to rock and roll. Just going to pass over the microphone. SPDas, we're ready for you anytime.
Yeah, thank you, Igor. And let's get started on the London session now. Welcome back, everyone. The last 10 hours or so have been sideways. I just saw the Euro USD and gold charts in a while. Gold has slightly inched higher, so maybe we'll have to restructure the count there. But Euro, it's absolutely flat. So that is let me just draw the path again. It's not that it's changed the track, but maybe we are looking for sideways. It's converting into a triangle. Maybe that could be a triangle in the making. One more leg higher. That could be wave B of the corrective decline, and then lower towards wave C. That would be a lower degree wave 2 in place, and it would then give way to the third wave up. This is a high probable trajectory for Euro USD in the next few hours, so please be watchful. And as discussed in the last session, we will be doing the counts or the wave paths again each time we meet. So I'm not going to keep it as it is, just for the sake of if new users are joining, they would be with us in the same page, on the same page, sorry. So the optimized trading point of view, we are right now around 280s, 280s, maybe another 40 points if you want to wait. That would be an optimized entry. But believe it or not, if you are up to the risk of 1.0100, if you can keep a stop there right now and can afford the risk here, 200 and 180 points. I mean, that's not a huge risk considering the fact that a larger degree trend reversal could be in the making. From trading point of view, I mean, you can go ahead and buy right now or around 40, 45, whichever is uh, risk relevant to your account. Please go and do so. The next trajectory of the Fibonacci extensions should be taking us at least towards 450 or yeah, 450. That's the resistance. It falls in line. I mean, most of the time we have seen that the Fibonacci ratios also, whether they are the extensions or the retracements, they fall in line. And that's what we are seeing right now here as well. All right, so 460 would be the first short-term target, and it would be followed by 650 or so. So just a moment, if you let me see if you can track a resistance over there as well. There you are. The next resistance is lined up right at the Fibonacci ratio. This is an amazing theory, more quite powerful. The waves and the Fibonacci ratio, that's the wave 4 of one larger degree when the euro was declining, remember? So finally, that would be the target when the larger degree count, when the minute wave 1 would complete. And if we go back on the daily chart and try to plot the minute wave 1 over there, let's see how it's shaping up. Possibly If we do the minute wave 1 here, if that is the lower degree wave 1 on the minute side, we've got minute 2 and then 3 up there, 4 and 5. So this is a minor degree. We'll have to just assume that it's a minute one lesser degree. It makes a lot of sense. I mean, the way it has dropped, almost a similar way it is going to go back higher. All right, that's what looks like. We'll take each cycle step by step. For now, it looks like we have done minute 1, looking for minute 2 and 3, 4, 5 respectively. All right, so long in Euro USD, whenever you are your risk aptitude, whichever risk aptitude supports, whether 80s or 40s, please enter on the long side. GBP USD, we are already long. I think it's producing another opportunity. I mean, last time when we were here during the Tokyo Sydney overlap, we were talking about a WXY. This is what a WXY normally looks like. WXY is a 333 pattern. It's a three-layer pattern, first of all, we need to understand, which is a corrective pattern, corrective. And each wave subdivides into three layers, like this: ABC, ABC, and ABC. It could go all the way and even remain below that low. That's fine. And it could terminate here as well, so that's okay. There's no pattern like running. There's a pattern like running flat, but not a combination though. So whether here or there, it really there's no rule. It can be anywhere. The important thing is it's a 3-3-3 structure. Each time there's a 3-3-3 structure, we don't label it as an ABC. It's called a combination. If we have done it correctly, then the next wave should be the third wave. I think we are now close enough for most risk assets to produce the third wave rally anytime soon. Maybe it could take another few hours, bring us to the New York live or overlap Tokyo Sydney tomorrow. Remember, we are just about 3 days away from the big event as well. I mean, that's what the world is seeing. I mean, of course, it's an event, a historic event on Monday. But as far as the charts are concerned, they've already taken everything into account. So, but the only thing is, before a major event like a GDP or an FOMC or maybe what is coming on Monday, Trump inauguration, major events when they are lined up about 1 or 2 days earlier before the event is occurring or is to occur, uh, prices tend to go a bit sideways. It's not a rule though, it's just a guideline. It's okay. So just before the that event, maybe we might see some sideways action. Since the last 10 hours, that's what is happening right now. Even in the dollar index, it should be on the same lines. But let's not lose sight on where we are looking for the dollar index now. The dollar index now is projected uh, for a three-wave corrective move higher, and then the next move should be lower. So a minimum projection for dollar index is around 107.70, and the Fibonacci ratio ideally should be matching with the wave as well. Let's have a look there. almost there. 107.60, yes. And the second cycle should match up with the larger degree wave for termination of sorry, one lesser degree termination. That is also we are just shy of the support there, 105.39. We have the Fibonacci is showing 105.59, but that is absolutely in line. A few pips here and there, points here and there can be always given a benefit of doubt. The structure is taking shape nicely for a decline uh, in the dollar index. So trading point of view, we were suggesting 109.60, correct? We are already 109.11, so it's about 50 points here and there difference. If your risk management allows that much leverage, then keep a stop about 11030 or around 11030. Enter shorts here. Maybe you can enter partial, the remaining over 10960 and target around 10775. 10775 will be the first projected target. So what you can do actually is if you want to ride the entire trend, then each target take partial, keep booking partial profits and keep one portion of your trade as it is. And then when a pullback occurs, again re-enter. All right. And then we'll keep on revising our stop losses as well. So that way, even though we are trading, it would become a kind of investment for maybe 4 to 12 weeks or so. All right. Gold is something that we'll have to adjust the risk because it has now completed 5 waves, 1, 2, 3, 4, and 5. Or fourth wave was an expanded flat, and the fifth wave it is. We should also be seeing a diverging scenario. It's almost there. Divergence has been carrying on. But gold can really test our patience with the pattern that it wants to complete, and then it will do what it wants to do. So ideally, where we are in the cycle is that minor wave 3 is complete, and we are looking for a minor wave 4 as a triangle. Now, if it is going to be a triangle, then wave 4 will complete somewhere around the 2620. If not, we are going lower towards 2500. All right. I'm going to put a question mark there. The reason I'm taking a text, if I take a label, then I have to label all 5. It's still, if it is still unfolding as a triangle, it will reverse sometime now. And then take it over from here. But otherwise, I think with the price action reaching almost 2700 handle, it should be well poised for yet another rally just beyond that 24 or 2730 maybe. That is quite possible now. So it's ideal to place our risk or shift our risk to a 78%. Let me find out the Fibonacci ratio. Yeah, it is 2737. So ideally place above that resistance 2752, maybe around 2755. So slight 20 points adjustment, 25 points adjustment of the stop loss around 2755. And then we'll keep our options open. Either we book profits around 2620 or if it's not a triangle, see if it goes to 2730, that means the wave B, remember, let me do it again, please. we are looking for a minute A, and if you remember, minute B was print here, and we are expecting minute C lower. Let me change the degree to minute quickly. So what I was saying was, if it pushes through the 2730 mark, then minute B would be labeled here. And in that case, it won't be a triangle, expected triangle anymore. It would be straight wave C at the minute degree. And believe it or not, in that case, minute wave C could could take shape as a five wave decline, straight like that. Mostly it would be a five wave decline carving an impulse or a diagonal. All right. So either so, but the trading direction is on the short side. It's quite a bit. But gold actually it has got nothing to do with the risk assets. I mean, it's moving as per its own uh, pattern, and there's nothing wrong in it. I mean, that's why I keep saying sometimes correlating with asset classes is okay, but always trying to correlate with the asset class can really put us into trouble. So it's better to watch the chart individually because euro is sideways, uh, dollar is also almost sideways or maybe wanting to rally. The risk assets, I mean, the stocks are up and gold is also up. That comparison doesn't work. All right, that correlation doesn't set. Anyways, we are now looking poised for an ABC flat here around 2730 before the next move occurs on the south side or resumes on the south side. Before we move to the coins, I think coins would also be somewhere in the on the silent zone where the price action in the Dow Jones is absolutely silent right now. The counts which we had done earlier are not yet coming up. Sometimes it takes a while to pop up, but that is okay. We know the structure. We are expecting the retracement to carry prices through the 43,800 mark, and then we can expect a reversal lower. Or today also there could be a pullback, three up followed by three down, and then five up. It is up to the market which path it wants to take, whether it wants to take a 335 structure to reach 4780, or it wants to reach a 535 structure. That is left to the instrument. Okay, Bitcoin. Quite a quite a quite a bit of waiting here in the Bitcoin. This is what it is. Maybe we can change the strategy because there's a three-wave corrective decline already there. Too shallow, actually, too shallow to commit on the long side completely. Maybe partial longs at 99 and remaining around 92 can be planned if you feel like. But even though the risk reward ratio is too far not absolutely convincing. So my first suggestion would be to wait patiently for a corrective decline towards 92 uh, because here we were discussing about going or entering long aggressively. Had you done that, it's okay, but after break of that resistance around 95, there has hardly been a correction. You see that? They're absolutely shallow corrective drops. So we need to see a meaningful corrective drop before the next rally occurs. And if you're up to it, or if you're wanting to commit yourself at least on at least 50%, it's fine, or 25% is fine. At least divide your buying to maybe three times, or 30% each, or 25%, 4 times each. All right, that is a good trading strategy. I think it should be the same around Ethereum as well, because okay, we can see a first impulsive decline, one, two, three, four, five. Just a moment, sir. The first decline, if it is touching the, if it's almost five waves, which it looks like, then the move is incomplete. We can project the target. 3190 is expected. 3190 is expected for Ethereum in the next leg or so. And I think if Ethereum is dropping to 3198, maybe rationally, Bitcoin and Solana would also drop to their respective supports, and that would be a good place to enter. So Ethereum buy around 3190, stop around 29, and target around 43 or so. All right. Okay, let's pick up Solana now. Almost a three-wave corrective, but that is a very shallow decline. It could be the first wave of a corrective decline, but it's not the right price to enter. In fact, we should wait for the extension to complete and then enter. A minimum buying at the 38.2% is 192. So I believe 187 should be ideal because it's previous wave 4 of one lesser degree, just in line with the Ethereum. Somewhere around 187, if you go on, and the long side with a stop around 169 and targeting around 280, 300. That should be an ideal trade setup now. All right. 187 for Solana. And Ripple, I think Ripple moves independent. That's what we saw last time. But it was planning for a corrective decline, nowhere near correction. The third wave is underway. We are quickly pushing higher towards 3.7. So once the bus is missed, it's very difficult, when extremely difficult, especially when the triangle breakout is there. You see that how the price action has moved. If I extend this triangle wave, you see that was the last test, backside test they call, and a rapid resumption towards the breakout direction. So our stop loss has been moved already below that. I think now if we move to 2.71, it would be more safer. But it's up to you. I mean, if you keep the stop loss here, and it's almost targeting around trading around 3.09, which is the first target anyways. It's up to you. I mean, the second target is not too far away. So even if you place your stop loss or continue placing a stop loss just below 2.34, it is technically okay. It's not going to reach there ideally. All right, but the triangle count has worked fine for Ripple, and that is what is more important. And with that, it brings us to the end of the lineup for the session review. Once again, I thank you everyone for tuning in, and I'll hand over to Igor. Igor, back to you.
Thank you, SPDas. Thanks very much, SPDas. Always a pleasure.
Yeah, bye bye. Thank you.
Here. Hey, everybody. You were just watching SPDas covering the London. We'll be moving the London Open to the actual London Open either next week or the week after. We'll see about the timing, and of course, that way it'll be the actual London Open coverage. A couple of notes. So our infra is getting closer to completion in terms of having the levels ready for other developers to be using. So that's pretty exciting stuff. We haven't been talking about that much, but is working in the background through a separate domain. I'll be announcing that another time. Part of my morning voice here. Um, yeah, so we'll be back for 8 a.m. with IT Trader, covering New York as well as smart money and ICT concepts. Looking forward to seeing you there. Take care.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.